Hey, Ark, how's it going?
How's it going, boss?
How's it going? Doing good over here. How are you?
I'm doing outstanding. I'm just a little shaky because I'm nervous about this new live. I don't know. I tried to read as much because I don't read. I just I skim through, but I'm just nervous. I know people say, "Well, do what you've been doing," but a lot of times I would just look up and I'm in profit and I'll snatch out the money or I move up my stop loss or something. But what I'm trying to get into is some of the questions. Speaking to Razik. I know he's in school now, so I'm thankful to God that I got with him because he kind of said it in a certain way where it wasn't so complicated. Uh, but where my problem comes in is if something that's not told to me happens, an occurrence, such as price does this or the spikes, we're not supposed to be in the market. I freeze up because I don't know what the next step of action is. Now that if I have to remember all the steps. I go through no cards and I can remember all the steps in one day. But for the most part, I typed everything out to tell you what I think. Uh, the last thing that Razik was telling me that you can take, you can put all your TP ones, you can put all your trades at TP ones, and I noticed that as I was trading, I wouldn't even try to get to TP2, and I was happy. But with money management, if you don't change the stop loss, you could be spinning your wheels because of the stop loss is really set to a doubled amount of TP1.
Exactly. Yeah.
So I'm trying to find out. I guess the things that I want to accomplish is get my alerts set like they was prior to my phone messing up. Where that once that signal happens, I get something on my screen and I get some kind of alert. I know you may not know because you probably got an iPhone or something, but just at least get me started to that point because I tried it, but I'm for some reason that I'm still not hearing it. And he said something like it's like 100% unless news kicks the trade or make a trade do something crazy. Well, when we was going about possible winnings per month, he said, "Well, you can just a guesstimation because I'm pretty sure we don't make the same amount of money every month. It all depends on what the market does and a little bit of influence. But what I'm saying is, it went from about 8,000 down to possibly 1 or 2,000. Now, 1 to 2,000 is still profit, but if the TP1 is 95 to 100% before it kicks you out of the stop loss, which is set double. But from what I'm understanding, he almost was telling me set both of them, set the stop loss to the equivalent amount, or set the stop loss to $1,000. And he said, "Yeah, you're gonna probably lose a little bit more, but over the end of the month, you're gonna make money, and you don't have to look at it as much." I don't know. But there was one trade that he took, and I pulled my trade once it went into profit, but it shot back down and went into negative, because you know how the US 30 is. Well, he got negative 1,200. Well, I'm saying, how did he get to negative 1,200 if he had a stop loss? So that told me he must do certain things at certain time, depending on if he's busy or not. So I'm just trying to get back my intensity like I was, because I wouldn't say lazy, but I don't have a flow right now. I'm not like I don't have a flow right now. So, and what caused it is while I was going through the second verification, for some reason I copied the trades. I was there, but I still copied the trades because it helps me move faster. But I copied the trades and I never had to move anything. I never had to add or subtract a number. But suddenly through the second verification, I see somebody else ask about it that they're off, the numbers are off. And you explained it in your other chat with me that I watched. But that's bothering me. So I'm if you can ask me questions to see if I know what I think I know, because I seen the US 30 move like crazy today. It went from a positive green candle to a negative big long red candle in a matter of 10 seconds. And I said, if I mess up, you ain't got time to fix it. So that's it. That's just a rundown. That's why I typed it out, because I tend to lose train of thought.
Yeah, no, I agree. The US 30 is moving kind of crazy, especially today. We did have an entry that showed up just about 20 minutes ago, but it's a little too late because we're already in the next market. With the session switching from New York session to now the Aussie session and the Asia session. That's why we didn't take this trade today. But yeah, lately it's been moving a little crazy. And going back to your question with regard to with the FTMO being a little different. I don't know if you noticed, but after I post a US 30 signal, so like right here, I post the US 30 entry.
That for the US session, or was that for the London session?
Yeah, I never post a London session. I've probably posted it like once, but normally I don't because I'm asleep during that time. But generally, when I send the New York session entry right after it, I usually have the FTMO parameters as well. So I don't know if you noticed that. You see here on my chart. I don't know if you're looking at my chart right now, but yeah. So on my screen right here, normally I'll send the normal US 30 entry, which is for other brokers like Hugo's Way and stuff like that. And then below it, I have my parameters for the FTMO. So if you just want to wait for this one to come out, you can enter with these parameters right here, so you don't have to make those adjustments. However, if you want to make the adjustments, it's not super difficult. I know it's a little bit of a hassle and it's a little tedious, but once you do it enough times, you get used to it. So you can see right here that the entry was 28278, and we were entering a buy. So what we did is we just subtracted 130 or whatever the difference was from the entry here, and it was pretty much the same thing. It was just a little change that we made. But I do post the parameters for FTMO as well, so I don't think you have to worry too much about that. But if you do want to do it on your own, you can. I mean, they'll come out a few minutes later because I got to type up both of them. But I do usually send both of them out because I'm taking those trades as well. So when I take them, and then I put my own parameters there for FTMO. But you can see here that it's just a little different. So if I do the math on this, the entry on the original one was 28278. Yeah, and then I subtract that by the entry right here for FTMO. So we'll see the difference, which is 28158. So you can see the difference is only 120 pips. So what we do is we just add or subtract 120 to all of the numbers above here. So if it's a buy, we'll subtract it. If it's a sell, we add to it. So those are the two little differences. But I mean, if you just want to wait for me to post it, I normally post it right after. So I don't think that should be a huge issue. Just wait for the following post right after with the FTMO parameters.
And it's not 130, it's 120.
It depends. So sometimes it'll be 120, sometimes it'll be 130. It just really depends on what the spread is at that time, because the spread's not always going to be the same. Sometimes if the market's moving pretty crazy, the spread will be a little wider. If the market's moving normally, it'll be around 120. So 130 is like the good sweet spot because you kind of want to give yourself some cushion, but it's not going to make or break your trade that you're off by like 10 pips. It's not going to make a big difference.
So with the spread, you're telling me like it'll make a difference on what the profit will be because it'll pull away some profit, or it'll make it have to go further depending on the spread. So you got to compensate for the spread.
Exactly. That's basically what we're doing. You're just compensating for the price difference, which is only 120 pips, which is not really that much. It seems like a lot, but it's not going to make or break your trade. If price gets to the TP, it's going to push a little farther, like a few 120 pips above it. So in most cases, you'll still hit that full TP. It's just, you're not going to have the exact numbers. So it's a small discrepancy, but it's not going to make or break your trade most of the time. But I do post the FTMO parameters as well. So you don't have to, just focus on that specifically.
Okay.
I mean, you can do the math if you want. It's not super hard because like right here, you can probably eyeball it. Like the entry right here is 28278. And then if you just want to subtract 120 from that, you just you subtract a 2 right here, make that a 1. You
Okay.
subtract a 7 right here and make that a 5. So it's not a big difference, but if you want to be exact, you can, or you can just wait for me to post it as well.
Okay. So with that last point, with that 7/8, with the 8, you really don't even have to touch that one because that's so small it wouldn't make a difference.
Exactly. You can even just adjust, you could just adjust the third number. So instead of adjusting 120, you could just do 100 or 200. It's really up to you how you want to do it because, as long as you're within that range, within, the 100 pip to 200 pip range, because that's generally where the spread's going to be, you can always just change that third number. So if you're entering a buy and then you see a 282 right there, you just change that 2 to a 1. However, if it's a sell, you just change that 2 to a 3 because you're going to add to it. So it's not really a big difference, but I mean, I could see why you get kind of nervous because I did too when I first, because I noticed that too. I know when we were trading, a couple weeks ago, they didn't have that issue where the pricing was different. But when we got the new account, like when I got my funded account and then you got your, next level account, that's when the pricing kind of changed a little bit. It looks like a lot because it's like 120 pips, but in reality, it's only like 12 pips because these are measured in like micro pips. In compared to Forex, the US 30 is measured a little different with regard to the decimal moved over by 1.
Okay, so I just need to take a chill pill, and since this is a buy, I will subtract that from the profit target 1 and 2.
Exactly. And then if it's a sell, you just add to it. So if it's
So that ain't that difficult.
yeah,
I I can do that.
I
What
think
is
you just got to practice it because it seems like it's kind of difficult. But once you do it a couple times, it's just like learning a new skill. You're gonna get better and better at it every time you do it.
true? And like, do I still have the okay if I want because that I don't care what the indicators do. I'm not trying to. That's your proper what they call it, your sole propriety. Uh, you own it.
Oh,
What I'm
proprietary.
trying to do is
Yeah, it's my proprietary software, so I
yeah,
can't.
yeah, yeah. It's yeah. There you go. I'm just trying to make sure if one of them is a break and retest, because the break and retest, I know it's gonna come back 90% of the time, and versus I guess mentally when I get in and it goes against me, it saves me a lot of stress if I'm not so that much going down when it comes back down when I take it. But sometimes it keeps going, and I'm wondering, or am I getting way too deep and saying if it continues to go because the momentum is going so hard, I can get to a certain profit level that I can't just pass up, and if it comes back and retest, I jump back in because that was the original. If it haven't reached the TP1 yet, I can jump back in, but I should just take one trade and just keep on doing what I've been doing, right?
Exactly. Yeah, because if you start doing too much, you start to just lose track of things. Say if you're taking like 2 or 3 trades, you might be focusing on that one US 30 trade, and then you have these 2 other trades running, and you might get to a point where you might forget to put a stop loss, you might forget to put a TP, and that trade could be running, and then what an hour later, your account's going to be close to hitting that daily max loss. So you're putting yourself in some risk if you're doing that. Me personally, for my FTMO, I just take the daily US 30. I take one trade, that's it, and I make pretty decent profit off that. And also, when you're taking one trade, you're not really putting on too much risk because you know exactly what you're risking and you know exactly what your profit potential is. So, the main goal with the FTMO is just not to lose. Because if you don't lose, then you're going to come out in profit at the end of the month, regardless, even if you're just going for TP1, like you mentioned with Razik. All of our trades here. So if we look at our results for the month of October, you can see that, if you just took to TP1 every US 30 signal, you could have came heavy in profit because we have 7 wins and 1 loss. So even if you just took TP1, which is about 750 pips, and you multiply that by 7 wins, you be in profit 5,250 pips. And that's $5,250 if you're trading, a 10 lot on FTMO. And that's just for the first 3 weeks of October. And then we had 1 loss. So if you just subtract 1,500 off that, you're still in profit $3,750 for that, just taking TP1 for every single trade.
Okay. Now,
So, so it's
I
really,
let it get to take profit too. Like us, he was he was just saying maybe not put your stop loss there, but he's saying if it gets too large, just pull it because you can get it back on the next go. Uh, but I'm just trying to make sure I understand. Uh, oh,
yeah,
okay.
it's kind of, it's going to be like really up to your preference. You know, if you want to risk to go for the full move, you can do that. But even if you're only going for TP1, you know, regardless, we hit TP1 almost 99% of the time. We almost always hit TP1. So the thing is, if you just hit TP1 each time, you're not going to get the full profit, but you're still going to profit. So the thing is, you just got to win 2-to-1 trade. So you got to win two to, you know, break even if you lose one. But most of the time, we almost always hit TP1. Like that's almost, it almost always happens. And if you do you know, if you're just trying to go by ratios and, you know, determine the percentage, you could still hit TP1 like the entire, let's see, for this whole year, let's see how many trades we got here. Okay, so
But is it calculated in the TP1s or just wins and losses? Because like, how do we know which ones actually got to the full take profit, and which ones got to the TP1?
yeah, so if you look at the
Oh
result,
yeah, that you got it on there. Okay.
yeah, it'll say full TP right here. So US 30 full TP, and then every week we, you know, it gets updated. So like the week before too, let me see if I can find it up here. So the other week right here, let's see. So we hit full TP for US 30 one time. We hit TP1 right here one time. So, you know, that would be the one time where I didn't hit full TP. But we had no losses that week. So that was just straight profit. Even if you just took TP1 for, you know, the trade on October 6th plus on Thursday, that would equate it to a full TP for 1,500 pips. So, I mean, they're all listed on the results if you want to go back and look, but most of the time they do hit full TP because generally once it gets to that point, it usually just keeps going unless there's, you know, some sort of news event that's causing it to spike in the other direction. Especially right now because we're during the election, it's really unpredictable. You know, it's you definitely have to be paying attention because if you let it run, I mean, anything could really happen at that point. You know, you never know when Trump's going to send a tweet out or, you know, they might have some kind of stimulus plan that comes out. They'll spike price also. There's a lot of different variables that affect the market currently versus, you know, when it wasn't during elections and when it wasn't during COVID and stuff like that.
So like I thought during the course you said once the price moves to TP1, you bring it to break even, then move to TP2, you move it to TP1. But it seemed like lately, when it gets to TP1, a little bit over it, it's okay to put it at TP1 and just take the profit. Or am I hearing it wrong?
Yeah, I mean, depends on which strategy that you're using, which exit strategy, because there's multiple exit strategies. If you're using the basic exit strategy that, you know, everyone's been using, the same that I've been teaching you, you're supposed to move your stop loss to TP1 once price reaches TP1. But if you want to use, you know, the more conservative way of exiting, you can move your stop loss by percentage as it moves to like 25%, 50%, 75%. But that's a little more work, you know, it's a lot more complicated. So I think you should just follow the simple exit strategy where when we reach TP1, you move your stop loss to TP1. If we reach TP2, you move your stop loss to TP2. And that'd probably be the best way to maximize your profit potential without risking too much because we almost always hit TP1. You know, if you look at all the results here, they all hit either full TP. They barely hit TP1. Most of the time they hit full TP. So as long as you're adjusting your risk, you should be completely fine. Um, but I definitely think you should just focus on the simple exit strategy where you move your stop loss to TP1 when it reaches that point, and then again to TP2 when it reaches that point as well.
Okay. And if I'm okay with the London session, I know it's probably not as strong as the US session, but can I take that same type of mind frame with the London session too?
Yeah, you could use the same exit strategy for both sessions. Nothing really changes too much. I mean, you know, obviously the London session is not going to have as much volatility because the US 30 market isn't isn't open during that time, it's, it's going to be after market hours or pre-market hours. So you can still use it there if you want. There's no difference. Some people still trade London and they do the same exact thing. You're just not going to see as much volatility as you would during the US session, because US 30 is open during the US session, but you can still use it regardless whether you're trading London session, Asia session, New York session. It doesn't really matter.
Okay. And if it goes back to normal the way it used to be, would I be able to know? Because I knew something was wrong by how the stop loss was and the take profit. But let's say right before you got your new FTMO account, right before I went to the verification 2 stage, would if they adjusted back to normal, then I just copied the way it is.
Yeah, exactly. Yeah, if they do adjust it back to normal, I'll make an announcement. You'll know for sure. I don't think they're going to make it move back to normal anytime soon, because they just changed servers. So, changing everything back to how it was before, that's just going to be a lot of work for them. So I don't think they're going to be changing that anytime soon. So it's nothing to really worry about. But if it does change back to normal, you'll know. I'll make sure to let you know, because I'm going to announce this to the group as well. So it's not going to be a surprise to everyone. If we get any news on that, I'll make sure to inform you, so you're aware of that.
And with the scalping, I know I'm not ready for that. What I want to do is take some of my downtime while I'm waiting on the trade to happen for the U.S. and the London, is practice on the practice account. That I use the Mobizen video recorder to record, so I can start looking at the flickering notion that I keep saying, that I knew what the word is, flickering. Well, is there a video of what because I know you say it bounces off. And
yeah, that's not really something that I teach, because it's a little more advanced. Like, you kind of have to know how to read the charts, like from on your own. But I mean, it's pretty straightforward. So basically, like right here, as price is coming down, when price comes up, this is what a lot of people do. It's not just me, but whenever price comes up, they just enter sells as it comes back down. As you were saying, as it flickers, it'll come up, hit the pivots, and flicker down. Come up, hit the pivots, and flicker down. And that's kind of similar to what you were doing previously too, when you were doing your scalps, when you said you didn't know what you were doing. But it's something that you kind of just have to. It's going to come with instinct, but it's not something that you could really.
It's not trainable. It's something that you got to have the girth and what's it called, the wherewithal. That you got to be brave enough to do it, to hope it's not going to just continue to go against the other direction.
Exactly. Yeah. So you just got to keep practicing, because for me, I don't even think about it, So like, say right here, if I was taking this trade and then it comes up right here, I'm going to enter sell, and then I'm going to exit, as it comes back down. And then I'm just going to keep doing it over and over again. But if price was to come up, past the pivots, like way up here, then all right, I'm going to pull out of that trade, because that trend's probably done. But if it doesn't, and it just keeps coming down like it does right here, I could just keep hitting sell, and then, ride that down, cash out, hit another sell right here, cash out, hit another sell as it comes back up, cash out. Because the thing is, if you keep hitting all these right here and you keep stacking up like little profits, you can take that loss, like that one loss, when it, ends up shooting up, because you already stacked up enough profits to survive that move. But yeah, like, just like you said, it all comes with practice, and it's going to come with just you understanding how the market moves, because it's not something that you could really teach, because it moves so fast. And that's why I don't teach it, because the thing is, I know it's addicting. Like, if you're going to hit all these right here and you have like 10 straight wins of scalping, this is going to be the only thing you want to do. And it is profitable, but it's also very dangerous, because the thing is, trading is like gambling. It's like literally an addiction. At this point, you're just gambling. You're not really using skill, because you're just seeing as price comes up, and you just take that sell, and you're just pretty much scalping each drop right here. So it kind of like, there's not really much skill involved here, because you're not waiting for anything. You're kind of just taking sells as price comes up and spikes away from, the pivots. So that's why I don't teach this strategy, because I know that if I teach this strategy, a lot of people aren't going to do it properly. Like I mentioned earlier, when price comes up and passes the pivots, you you have to know within yourself to exit that trade. Yeah, you gotta know to exit that trade, because the thing is, a lot of people are not going to exit that trade because they're going to keep hoping that it's going to come, right back down. But that could very well never happen, you know. So it's something that I think you should definitely practice on a practice account, but it's not something that I recommend you really hop into unless you stop being scared about it, because the thing is, if you're scared about it, when you get confused and you don't know what to do about it, then you're not confident with your trade. But once you're confident, you could enter in a sell, exit right here, enter another sell right here, exit down here, enter another sell, exit right here, and you could just stack up profits that way. But the thing is, you don't want to be scared. You want to be confident with your trades. Like right here, if you were taking some buys, once price comes back down, you enter a buy, comes back down, enter a buy, comes back down, you enter a buy, and then once it crosses down like it did right here, you got to know to pull yourself out of that trade. But it all comes with trade psychology. It depends on how confident you are with your trade. And it's something that just comes with practice. It's basically like with everything you did, even right now with your pest control. I'm sure you weren't 100% confident when you first started, but after you've done it long enough, it's like second nature to you. You don't even have to think about it.
I got you. And is it better to learn with the scalping when the market is volatile, or it doesn't matter because it's based upon the pivots?
It would be better when the market's volatile, because the thing is, when you're scalping, you want to get in and out of these trades quickly. Like right here, every time it bounces off, you want to get in and out of that quickly. If you're trading where it's not volatile, like right here, you could be holding on to this trade for a while before it bounces back up. And that's not something that you really want to do, because the longer you hold on to a scalp, the more nervous you're going to get, because you're like, crap, I usually get out of this trade within a few minutes. You're holding it for an hour. You're like, damn, did I do something wrong here? But the thing is, this is during Asia session, so it's moving a lot slower versus US session over here, where it's moving really quick. So that's why when you're scalping, you kind of have to pick a good time to trade it. Like you can see right here, this is like London session. I was saying that for London session, it's not the US session. So that's why it's kind of, going sideways. It's not always going to be volatile. Versus, right here during US session, you see how much it moves over here. So US session opened right here, and you see this huge move upwards, right? So you can see the difference between the sessions. Like right here is it's Asia into London session, and it's just slow going sideways. Once we enter US session, it starts moving really quick. And then again, right here, once we enter Asia session over here again, it just goes sideways for the most part. And it kind of makes it impossible for you to exit that trade, because you can't exit it if you're on profit. And you're not going to be in profit until it actually moves directional. Do you get what I'm saying?
So it has to be doing the part where it's moving. So you can pick whether you win or losing, at least you know to get out of it.
Exactly, because when the market's volatile like it is right here, you'll know that you can get out of the trade. Over here, you kind of just gotta think to yourself, am I going to exit this trade, or I'm going to hang on to it? And then you're just going to be hanging on to it for, like, let's see how long is this. So you'd be hanging on to this for like 8 hours. That's a lot of time to be thinking about your trade. If you're over here, you can enter this trade here, and then you can get out within a few minutes. And then again, right here, because the thing with scalping is you're only supposed to be holding it for a few minutes. But if you're holding it for like 8 hours, that's not scalping anymore. That turns into an intraday trade. And that's why you should probably focus on trading it during, US session right here, where it's actually moving, because you can always just enter and exit trades. Like, it comes down, you enter a buy right here, you exit right here, drops back down, enter a buy, exit right here, and you just keep doing it over and over again.
But then you don't know which one is going to bounce off of, dude.
Exactly. Yeah. Well, I mean, generally, you would probably want to enter at the green or the yellow line when it comes back down, and then you want to catch that little bounce back up. But
I'm sorry, you saying something?
Oh no, I was gonna say, like, you can see here during US session, it's pretty clear that you can see the bouncing. But if you go into Asia session right here, it kind of it'll bounce off it, but it'll just keep bouncing back and forth. It doesn't really have a direction, versus right here where it's US session, it's like moving pretty smooth upwards, moving smooth upwards here, moving smooth downwards right here. It's a smooth move during New York session. So if you're gonna scalp,
you wait till those bands spread out, which is like a trampoline. And,
Exactly.
and so it's the chances of it going all the way through is slim. And like what lot size was you? Because you said you was over leveraging when you did it. When
Yeah.
you did 10K.
Well, yeah. Well, for me, it's a little different because I know what I'm doing. So it's like I can go heavy, but for you, I'd probably just keep it small and then you can increase it along the way. Because for me, I'm using like 50 lots. So it's like, say if I'm going for, like 500 pips because I'm scalping, right? So if I'm doing that, I'm gonna multiply that by 500 pips, and I'm making like 2,500 off that scalp, off that little move. But you could do it with much less. So you can do it with like a
Five.
with a 10 lot, or you could do it with a 5 lot too if you want to, which will be 50 cent per pip. And then if you're going for 500 pips for a scalp, you still lock in about 250 bucks. And if you do that about, 2 or 3 times, then you can easily lock in, like 750 per trade. So I think you should probably start off small, maybe with like a 5 lot or a 10 lot, and then you can slowly move your way up. You also have to make sure that you're, it depends on your account size too. These valuations are based off 100K account because
Okay, so okay, so 100K account. But I wouldn't dare try that with my 100K with the FTMO. But what I'm asking you is, with the difference from the FTMO and the normal broker, what would one lot be? Like right now, I'm trading with the 15.00, which is really a a a mini or a micro or something like that.
oh yeah, okay. So I'll write it right here. So basically,
So what do you?
FTMO lot size. So say for FTMO, right, a 10 lot, that's going to be equal to a 1 lot Hugo's way. You see the difference right there?
Yeah, so I'm trading with a 1.5. Then I'm trading with a 15 FTMO.
Exactly. So if you're trading a 15 on FTMO, that's going to be a 1.5 on Hugo's way. All you got to do is move the decimal point over by 1. So you can see how the decimal is just in between the 1.5 here. Over here, it's on the right of that side for FTMO because they measure it by micro lots.
So so with the scalping, I would. Is it safe to keep it at 15?
I would probably go less just to well, are you going to be practicing on FTMO or are you going to be practicing on Hugo's way? Because it's going to make a big difference depending on that.
I guess I'm practicing on the FTMO.
Okay. Do you know what the lot size? I mean, what the account size is for that?
For the practice, for the practice account,
Yeah,
uh, let's say $10,000.
$10,000, and you're probably gonna have to use a smaller lot size. You'll probably have to use maybe a 1 lot to maybe 2 lot because it's gonna make a big difference. If the account's 10,000 versus the $100,000 account, it's gonna your margin is gonna be way different, and then your max loss is gonna be way different too, because so I think the max loss on a $10,000 account is gonna be I'm assuming it's like 1,000, right? So your stop loss is probably going to be about a 1,000 pips. So if you're trading like a standard or a 1 lot and you multiply that by we'll just say like 1,000 pips is going to be your stop loss. You're going to be risking $100 per scalp. Like you can't be risking too much if you're scalping, because if you're taking 5-10 trades, you multiply that by 10, you're going to be at your max loss already. So
Okay.
that's why you kind of just gotta, it's gonna depend on your account size, and then also, depending on what broker you're trading on. Because if you're trading on a Hugo's way or a normal broker, you're not gonna have a max loss. However, you should always keep in mind that you should always have a max loss in your head, because that's how people blow their accounts, because they don't pay attention to their losses, and then they just start gambling. They just start keep adding positions on positions on positions, and they just keep losing, and then sooner or later they pretty much lost the account.
Okay, so and then with my goal of 12,000, even after I paid the 30%, that's doable with the two trades a day.
Yeah, if you're doing the daily trades, so let's see what the results are for US 30. So let's see.
Cause I would love to do the full TP. I'm just that I'm okay with close to $1,000 per trade.
Yeah, exactly. So, just for this month of October, or we could even go over to September just to let me see what the results were for September. So even for September, it was we locked in a total of 7,600 pips. So, for that month, it was kind of a slower month, but you still would have locked in 7,600 if you were just taking the daily entries.
And that's just with the U.S. session.
And that's just the US session. That's just one trade a day. If you take two a day, you might have more in profit. So, this is only like just got to keep in mind that it's only one trade. So, depending on your lot size, it could be even more. So, say if you're doing a 15 lot, right? So, if you're doing a 15 lot, that's 1.5 times 7,600 pips. You could have locked in $11,400 just taking that one trade a day. And then, even if once you take out that 30% for FTMO, let's see, multiply that by 70%, you still take home nearly $8,000 just for taking one trade a day, which is not bad, no stress. You kind of just, stack up those profits.
Okay, and then you don't have to worry about blowing your account.
And then, yeah, and then on top of that, you don't have to worry about blowing your account because you're only taking one trade a day. So, if you end up losing a trade, it's like, all right, well, you'll make it back the next day or the day after. It's not like, it's not the end of the world. Because the thing is, you have control of your risk because you know exactly what you're risking per trade per day because you're only taking one trade. So it's not, it's not rocket science where you're just like, all right, I gotta like, if I lose one trade today, I'll probably win tomorrow, and then you'll be at break even, and then the next day you win again, and then now you're in profit. Versus taking like multiple trades a day, the numbers get kind of messy because not every day is going to be the same, obviously.
And uh, I'm still trying to. So when you said 15, that's the amount that I'm trading with now, though, with the 1.5.
Yeah, so if you're taking a 15 lot size, then your multiplier is going to be 1.5. So you just multiply that 1.5 times however many pips you make. So say if you were taking 15 lots and you took all the trades for this year for indices right here, you just do 1.5 times the pips right here, 80,875. Total profit would be about 145,000 if you took every single trade and you let it run to full TP, full stop loss, and you were taking a 15 lot size. That's pretty much how you do the calculation. So if you're doing a 10 lot, you just multiply it by 1, 1.0. If you're doing a 15 lot, you multiply it by 1.5. If you're doing a 2 lot, you multiply it by 2.0. It just, that's just basically how you do the math. If you want to calculate, what the profit potential is for, that specific, pip win, because we have all the wins here.
Amount of pips. Okay, so I'm doing the 1.5 times the amount of pips.
Exactly. Yeah. So if you're doing 15, 15 lot, then you just multiply that by 1.5. So say right here, if we take one trade, it's going to be 1,500 pips, right? So you just multiply that 1.5 times 1,500. And then if we win a trade of full TP, your profit potential for that trade is going to be $2,250.
I'm understand. So just take the trade and when I buy, subtract, and when I get a sale, you add.
Exactly. Yeah. It's I know it might, it's hard when you're just talking about it, but when you actually do it yourself, like when you actually do the math, like when it's a live trade, then it'll make a lot more sense that way. But like I mentioned here, like generally after I send out the normal US 30 trade, I usually send out the FTMO parameters as well. So, you can either do the math yourself or you can wait for me to post it, but you're gonna get it regardless. So
But
it's
I done got addicted to. I done really got addicted to the to the to the TP2. I just once I'm up on the count, I don't want to blow my momentum. So then I start just going for 1,000 win versus the $2,000 win.
yeah, exactly. I mean, so once you get to a certain amount of profit that you're happy with, you can just move your stop loss. If you move your stop loss, then you have nothing to worry about because you're going to guarantee those profits. Plus, you're also going to be able to give the opportunity to hit full TP. So, that's probably the best way to do it. So you don't have to cut yourself short and you can still go shoot for that full TP as well.
Now that I even tried to scale out of it, I went close and I changed the 1.5 to 0.15. And it showed negative right when I was about to close it. And it messed me up. I think that was showing a negative of what I would have had left after I pulled out the larger lot size. Meaning you can close a larger position where you take most of the money out of it and then let the rest run.
Exactly. You can do that too. If you want to just close up half the position, you can do that as well. It's just people get a little confused when they start doing that because if your math isn't on point, you kind of, you put instead of putting a 1.5, you put like a 2.5, you're going to end up being on the opposite side of the trade. So that's why I don't really recommend that for people unless you know how to do it yourself and you're experienced in doing that, selling off half your position. But with a lot of people, it's been a lot of issues where a lot of people they do it incorrectly. So I don't really advise people to do that anymore unless they know what they're doing.
Oh, just
Because
pull the money.
yeah.
Okay, so just pull them up. And with FTMO, explain this. I know about the daily max loss. I think it's 5,000 for 100K, or maybe it's 10. But I think it's 5.
Yeah, it's 5 for the daily because it's a 5% loss. 5% is the most you can lose per day, but your max loss is going to be 10%. So the daily is going to be 5,000, but the max loss is going to be 10,000.
Okay, so the max loss you can lose during the 30 days.
Yeah, yeah. So your max loss, you can lose 10% within that whole month period from when you started the whatever account that you started. It'll
Now,
pay. Oh, go ahead.
okay, all right. Let's say your first trade you lose 3 grand, and then you rally back and you up 7K, and then you lose a quick 3 grand again. Is that the total max losses? You can't go over 10 grand.
Oh no, no.
But
So
if you get up in profit, then you start all over, right?
yeah, so once you move into profit, you can lose all that extra profit on top of the 10,000 that you were only able to lose to begin with. So say you're at 100,000. You're at 100,000, right? You're in profit 10,000. Say the next day you lose 5,000. So now you're still in profit 105,000. Your max loss is going to be 15,000 because you can lose that 5,000 that you have in profit, plus you could still lose the 10,000 that you were able to lose to begin with. So basically, an easier way to look at that is that you just can't go below 90,000. If you go below 90,000 in your account, then you failed the max loss for the month.
I got you.
Yeah, so that's an easy way to understand it because if you start to make profit, it's going to offset your max loss or what you're able to lose.
Now, and now with the video, and I'm really looking at that thing how you said that we'd have took every trade since the year, we'd have been at 100-something thousand. That's crazy. But and that was the full. That was just the wins total, or that the full TPs, or that just all the ones that we won off of, whether it was one TP, was TP1 or full TP.
Yeah, it was including all of them. So including TP1 or full TP. Generally, for US 30, now that the market's back to normal, we only have 2 TPs. So, most of the time, if it hits TP1, it's most likely going to hit full TP. So majority of those are full TPs versus TP1s because generally, once we have that momentum move in that direction in the morning, odds are it's going to keep pushing that direction until we hit full TP. And that's why we have that sweet spot for 1,500 pips, because that's generally how far it'll go within that session.
And there's no magic spot to know when see if you can put your stop loss so you can give it a chance to hit full TP.
Exactly. So if it hits TP1, I always recommend that you move your stop loss to TP1. That way you can guarantee those profits, but then you can also shoot for the full TP as well. So,
so out of a month, and you move it to TP1 and you but it's right over it. How many times that it don't kick you out of trade because it's so volatile, it's just made to go back down and hit your stop loss? Do sometimes you got it close and it runs through and you still get the full TP?
Yeah, because sometimes it happens. Sometimes it doesn't just stop at TP1. Like sometimes it'll shoot right through TP1. It'll probably shoot up to almost full TP. Then it might pull back a little bit, but it won't pull back all the way to, back to TP1. It'll just go sideways for a little bit before it shoots right back up to full TP. So there's a lot of instances where that's happened, where it's, it shot right through TP1. I moved my stop loss to TP1. I went on with my day. And then, maybe an hour later, it ended up hitting full TP. And that's pretty common. It's not something that just, randomly happens. It generally, if you're already reaching for TP1, odds are it's probably going to go to full TP. The only reason it reverses is generally because we probably held on to a trade a little too late. That's why normally I don't recommend holding on. Like I don't recommend getting into a US 30 trade if it's too late in the day. Like today's entry over here, this entry came up at, what was it, about 2 o'clock, about 2:30 or 1:30. So this session was already done because this session started way over here at 6:30. That's when the New York Stock Exchange opened. And then it ended up closing over here. So if you enter a trade this late, odds are it's probably going to reverse on you, because you can see right here per session, like here during US session, it goes down, right? Generally, when it moves to the next session, it's probably going to go up a little bit, opposite direction. And then again, right here during London, it's probably going to go again in the opposite direction. So it's going up here, and then probably during London, it'll probably go back down the other way. Because you can see that generally it moves in waves per session. And that's why I usually just trade during that session, but I don't really hold it into the next session. You can see right here, so you can see between London session right here, it went straight down. But each session is going to move a little different. Like right here, it could have went down or it could have went up. Same situation over here during the previous session. So like right here, you can see that the market opened right over here. So during Asia session on Sunday, it went upwards. Then London session, it went down. And then during New York session, it could have gone either way, up or down. But you can see that generally per session, market generally moves in different ways. Like right here, during New York session, it pushed up a little bit, like right when the market opened, but then it ended up coming straight down. And then the next day, it came up. So that's why I don't really recommend entering a trade too late, because generally if you enter it like towards the end, like right here, it could end up going the opposite direction.
Okay. And
so you can see right here, like right here, there was a sell signal, but it came up super late. This was on the 16th. This is when I was telling you guys, like, hey guys, it's a little late. We probably shouldn't enter this trade, because if you entered kind of late, it ended up going the opposite direction during the next session.
That's what I told Marcus. I said if I don't get that first signal in the first 2-3 hours, maybe 4, I don't know if I'm gonna take it, and then it runs into the spread time when the market closes.
Exactly. And you don't really want to hold it during the spread, because you're going to get charged a tax for holding position over to the next session. That's why I always send out that reminder, and I tell people, you should probably close out your positions if you don't have anything there, or remove your stop loss if you decide to hold on to it, because you get charged that swap fee. It's like an interest fee for holding it over into the next session. And sometimes it could be a lot, sometimes it could be a little bit. You just don't really know depending on how the market's moving for that day.
I got you. Can you show me about the alert thing? But uh, I know that I can't see your phone. I know you did it before, but I'm trying to see it one more time, and then I think that's it. The like once the candle closes, it's supposed to send a notification to my email.
Oh yeah. So if you set up your alerts, so yeah, I can't see your phone, but here I'll just show you how to do it on here. So basically, if you want to set that alert, you'll just go here to alert, and then you'll go here to condition. You'll change this to K2TS. You change this right here, the second option, to K2 signal fired, and then you'll change this to once per bar close.
Okay.
And then you can change, the message right here. You can be like US 30, 10-minute signal or whatever you want to call it. And then you can change the options right here, whether you want it, sent to your phone, notify on the app, which is on your cell phone. If you want to send to your email, you can do that as well. And then you can change.
Send the phone. Which one is the phone?
It's a notify on app. So you'll need to have the TradingView app on your phone.
Okay.
So if you got the app, then it'll send you a notification, when that signal is fired.
Open ended. I don't know what that is. Okay. Show pop up too. Okay. And play sound. Okay.
Yeah, and then once you have this set up, you can you just go over here to your alerts, and then you can turn it on if you want, or you can turn it off. Like for me right now, since I'm not waiting for the US 30 signal, I just stop it because I don't want to have all those alerts, throughout the day when I'm not actually, waiting for the alert to come in. And then in the morning tomorrow, then I'll turn it back on so that I get those alerts in the morning because I'm waiting for that, that trade, obviously.
Okay. All right. So I'm this close to making $7,000 a month. Okay.
Definitely,
All right.
definitely. Just taking the daily entries.
Okay. All right. Uh, and do you recommend a personal account or a business account?
Well, having a business account will obviously be better for you. But make sure you're consistent first, because once you're consistent, then you can make a business out of this. Like you can create an LLC, and then you can start running your profits through there, and then you can start, treating your FTMO account as a business. For me, I have a business account because I do all my trading through my business through K2. But until you're consistent and you're 100%, you're just going to keep racking in those profits every month. Then you can start the business, because right now it's not really necessary because you're not there yet.
And I couldn't. Uh, and with $10,000, I can't take the same type of 15 lot trade that I would with 100,000.
Yeah,
Once I feel comfortable.
yeah. Well, because you're going to be over leveraging if you're doing that with a $10,000 account. Because if you're doing that on FTMO, your max loss for FTMO is going to be $1,000.
Oh no,
So
no. I mean, like, let's say that I saved up 10,000, and then I want to trade. I want to duplicate myself, and I want to, because once I know the numbers that I got a win ratio of 9 out of every 10. I feel comfortable trading with 10,000 at that same leverage that I would with the FTMO account.
oh yeah, yeah. So for that, you'll just have to because generally like normal proper risk management is going to be a 0.01 per $1,000. So if you have a $10,000 account, you can start trading a 0.10, which would be equivalent to a 1.0 on FTMO. So even if you had $1,000, we still recommend that you use proper risk management, because last thing you want to do is take a position too big, and then you get margin called out, like you don't even get to survive throughout the entire move, and it stops you out because you don't have enough money, and then it ends up hitting full TP. So that's going to probably be the worst feeling ever if that happens, and it's happened to me before. So I still don't recommend that you over leverage. Even if you have a $10,000 account, you should probably still use a 0.10.
And that's on the Hugo's way.
Yeah, on Hugo's Way, or yeah, on Hugo's Way, or any other like normal broker. Um, that basically you should be using a 0.01 per $1,000.
Okay. Okay. I got it.
Perfect.
And I think they sent me everything, and I just do the same thing I did with the verification account, and then I just get it open, and then I started trading.
Oh yeah, so for your FTMO, are you done already? Did you finish the verification and stuff?
Yeah, I finished the verification, but I don't know if they they said they had to send it to the people, the executives, and then
Oh
they
yeah,
said qualify.
yeah, on all that. Yeah, yeah. So basically, once they're done with that, did you sign the contract already?
I thought I did.
Okay, yeah. So if you've signed the contract and you filled out the information, you just gotta wait, 2 or 4 days, maybe more, depending on how busy they are. But once the CEO or the executives have looked at your account, they made sure everything is good. Then they'll give you the login for your actual funded account.
And then does the 30 days start from when I start?
That's correct. So once you take your first trade, you pretty much hit the ground running. And then 30 days from there, that's when you're going to get your first profit cut, and then your refund for your challenge. And that's when you get your first payout.
Okay, so I got the login credential. Okay, so I guess I got it.
Perfect. So you got the account and all that already?
But it say congratulations on passing all the requirements obtaining the FTMO. Please find the login. Your FTMO app begins once you open the trade. Okay. The appropriate trading infrastructure and sales devices, backup internet. Okay. Yep. It says I'm ready.
Oh, perfect. So you're good to go then. So yeah, once you take that first trade, then that's going to kick off your FTMO account, and then you'll pretty much start your 30-day cycle from there. So 30 days after your first trade, that's when you can request your first payout, and then you'll start getting paid for your profits, and you'll take the 70% of that if you want, or you can leave money in the account. So what I recommend is you don't unless you really need the money, then I recommend leaving at least some money in the account, so that way the next month you'll have some extra cushion. So instead of having a $10,000 max loss for the month, you'll have the 10,000 plus whatever you left in the account. So that gives you that extra cushion, because the last thing you want to do is get funded and then you have one bad month and then you lose a funded account because you probably made some mistakes, or you just didn't take trades properly, because that happens. You can't, it's inevitable. You're going to get nervous because it's going to be your first time trading the funded account. So I always recommend that, at least for the first 1-3 months, unless you really need the money, then leave some cash in the account just so that you have some cushion for the following months, because you never know when it's going to be a slow month or not, or if you just end up making some mistakes that you didn't cash, stuff like that. I mean, it's bound to happen. It happens to everyone.
And so when next month, when November hits around the 20th, that that we still supposed to be trading like normal.
Yeah, well, you don't have to trade as much. Like, you can trade less. You just have to take like 10 trades a day, but you can do that easily. You can just take, like what we were doing during your challenge. If you just want to pass days, you can just take some penny trades, enter exit right away, just so you count those days. But regardless, you should be fine. I mean, if there's no trades during that month, I'm not going to call any trades, obviously. But there should be at least 10 trades for that entire month to cover, whatever trading minimum that we have.
But I might have to go over to the Forex side.
I mean, you could, but me personally, I'm probably just gonna stick with the US 30 because, even if I don't make a lot of profit, I'm not too worried about making profit with FTMO. It's more so just maintaining the account because, as long as you make some profit, you're gonna make some profit regardless, with FTMO. So, you'll have some big months, some months you have like some small months. It just depends on how the market conditions are. Because yeah, I do see November maybe being a little crazy or maybe a little slow on our end because of the election. So with the elections going on, we might be taking a little easy compared to how we were doing probably in September and October, this month, because there wasn't as much going on. But the main goal with FTMO is just not to lose the account. That should be your main goal. It shouldn't be a profit goal, like, because profit is profit. You close a month out with 10,000, you close a month out with 20,000. Regardless, that's still money in your pocket. Your main goal is just not to lose the account. So as long as you trade properly, manage your risk as you should be completely fine. I don't really see an issue because, just looking at the results, we're almost never in the negative, like at the end of the month. We might have a bad day, maybe a bad week in some instances, but overall, if you just keep taking the trades and you keep using proper risk, you're going to end up in profit regardless at the end of the month.
And that's just sticking with the US 30.
Exactly. Yeah. I
And,
mean,
and so it's possible to. I guess it is because I did the number. If I did 10,000 in 2 weeks, 20,000 is not unforeseen. But what I'm saying is, it's my luck. It tends to go is something always happens when it's my time to do something. So now we at the wrong time of the year. Uh, but
yeah, exactly. And that's why I'm saying that you should leave some money in the account for cushion, because you never know when, that month might happen. There might be a month where you get careless, you get a little too cocky. That happens to everyone. You start making a ton of profit one month and you start taking crazy lot sizes the next month, and then there goes your account. So the main goal is just to stay on track. Like how you said earlier, pretty much you just got to keep doing what you're doing, because what you did the first time worked, right? So if you keep doing what you were doing that first time, you should have no problem to maintain that account and just keep, profiting month after month.
okay, all right, we'll do.
Perfect. Yeah. Do you have any other questions, or are we pretty much done?
That's that's it. So should I get out of the frame of mind of putting my stop loss at the same distance as the TP1 and just leave it at the normal distance? And when I get to TP1, move up my stop loss.
Exactly. Yeah. Just leave it alone. And then once you hit TP1, then you can move your stop loss. I won't worry too much about it, because most of the time, if you're just watching the trade all day, you're going to be tempted to move that stop loss. But if you just, leave it alone, let it hit TP1, then you'll move it when you're supposed to, and you won't be making any like unnecessary, mistakes that you could have avoided in other instances.
Okay. All right. Thank you.
All right, all right. So I'll send you this link so you can rewatch this later if you want. If you have any other questions, we'll hop on another session. But I think you should be good for now. Hopefully the market picks back up so we can start taking some trades. But if there's no trades, then I don't recommend forcing anything. Just keep doing what you're doing.
All right. And I got to get my what's it called, the with the news. I got to get my settings for the news. What's it called, the Forex Factor.
Oh yeah, Forex Factory. So if you want to set up your news there, you just go to forexfactory.com. You hit calendar right here, and then you click on this little flag button right here.
Well, hold on. Okay.
Yeah, this little flag button. And then normally I just check off the red and the orange, because the yellow and the gray don't really affect the market as much. I just want to know when the actual news that's going to affect the market is going to be happening.
And so after 10 minutes after the news, we can jump back in the trade if it already happened, left that area.
So I wouldn't necessarily time it
just
like that.
just a myth.
I wouldn't necessarily time it like that, because you can see right here. So let me show you an example. Um, so this morning we had the Fed speak at 5 a.m., right? So if I put the market right here at 5 a.m., you can see that price didn't actually drop until like 2 hours later. So that's what I'm saying. Like you shouldn't base it off of time. You should base it off the movement and on the chart, because even though the news happened right here, and if you waited for like 10 minutes and you entered a buy right here, this big drop didn't happen until, way down here, 2 hours later, maybe 2, 3 hours later. So the thing is, you kind of want to watch the market to see if there is a reaction to it, because the reaction could come later. Even though the news happened right here, the reaction can happen until later down. So
I
that's
had seen
why
that with Trump. Trump did something the
with
other
Trump,
week, and it caused one market to move fast, but it didn't affect the US 30 until about 30 minutes later.
exactly, yeah. So what I recommend is, if you're going to trade before or after news, just check the chart, see if there's any weird, like any big movements, because normally you can see here that like this is a normal movement right here. Price is just moving normally, and then all of a sudden right here you see a huge drop for like, let's see, like 2,000 pips right there, right? So that's how you can kind of tell, like, all right, once this happened, so this little window right here is going to be when the news like was affecting the market, and then you can see that I kind of moved back to normal like a couple hours, like an hour later. So that's how you can kind of gauge what's going on. But then it could keep lingering. So you can see it came down right here, it went sideways, and then it dropped again even further. So
Okay.
it's kind of hard for you to really gauge news. You kind of have to just keep watching the chart, and then understanding how the market reacted to that specific news event. And every news event is going to be a little different. Like the Fed spoke today, obviously that's going to affect the market heavily. But if you like compare it to something like the retail sales, or something smaller, it's not going to affect the market as crazy as it did, like this right here, because this is directly affecting the economy, because the Fed's basically given an announcement, given updates with how the U.S. economy is, progressing with regard to COVID and with regard to the elections, stuff like that.
Okay.
Yeah, but news is something that you kind of just have to go along with. It's not, you can't really predict what's going to happen based on the news, because sometimes news could be totally one-sided, and the market could move the totally opposite direction. So that's why, me personally, I just recommend that we sit out the market during news. Some people want to gamble and they want to bet on it and trade during news, but me personally, I just don't think it's worth the risk, because if we just keep trading when there's no news, your profit potential is going to be nice, and you're not really risking anything, because you know exactly where the market's going.
Uh, can you put on the the pivots on the screen?
Oh yeah, sure.
Yeah, I'm that I'm just trying to see something that I know. It seems like for you that when I see you scalp on that last move down, that big candle down towards the bottom,
Oh yeah, something down here.
up up a little bit, like right when it dropped.
Oh,
It's
like
like no, I mean like right there where you had it before, but down one more swing,
okay.
right there, right when that dropped. It seemed like the gap right in between those wicks and that green line, that's an imaginary pivot that it may not even reach the pivot.
Exactly. Sometimes price doesn't reach the pivot. So if I rewind to this point right here, you can see that price got close to the pivot, but it did touch it. So I don't know if you can see that real quick. So if you look at this right here and you see how I move it, it happens for like a split second. It touches the pivot and then it bounces right off it, but it doesn't close with it on it. So the thing is, if you're watching this real time, you can kind of see that it actually touches it, but once the candle closes, because it closed way down here, it closes with it not touching it. I don't know. Did you notice that right there?
Say it again.
Yeah. So like check out this.
Hold on, I got this stuff on my screen block. Well, I think that's yours, or who that mine? Hold on.
Yeah. So look at my screen right now.
Okay,
Look
okay.
look at this next candle. It's gonna touch the pivot like for a split second, and it's gonna drop back down, and it's gonna close away from the pivot. So here, I'm gonna like show you real quick. I don't know if you noticed that right
Yep.
there. Yeah. So if you're watching it real time, it actually touched it. So if you're like waiting for it to touch, you probably would have caught it touch it, and you would have just entered, a sell right away, and then you would have pretty much rolled that down there, exit with profit, and then you just waited for the next time to enter that trade. Again, right here. So you can see right here, price comes up, it touches the pivot slightly, and then it looks like it's not touching it anymore. But in reality, it actually did touch it.
It didn't touch
It did. So like if you look right here, so if you look at this right here, this candle is going to shoot up real quick. It's going to touch the pivot, and then it's going to come back down and close below it. So if you look at that right there for a split second, I'm going to push the button right now.
Yeah, I seen it.
So if it's different when you're watching it after it already happened, but if you're watching it real time, like you're staring at the chart as it moves, you're going to see it come up and touch it. So it's going to be a little
I always knew that it'll lie, and it'll like take away history that was there, but after it's done, it goes away.
Exactly. That's why when you want to practice this, you got to forward test. You got to test it while it's live, because that's going to test your emotions. It's also going to test, how accurate you are at watching the chart. Because if you're doing it like this, it's not going to give you the real time of how it actually moved. Because the thing is, price is moving quick, especially during US session. It's moving back and forth throughout the day. So if you're going to scalp, I recommend you do it live versus doing a back testing like how we're doing right now, because you're not going to be able to spot those touches on the pivot as as accurately as you would if you were watching it live as it was actually happening.
So the touch is the key.
Exactly. The touch is the key. You see that touch, you enter a sell, and then you just write it down for another profit right here. So it touched right here, you exited right here, even though you could have wrote it down further. But if you're scalping, you're just going for those small profits. So you exited, you entered right here, exited down here, came back up again right here, entered your sell, exited down here again, came back up right here, and then you pretty much just do the same thing until that's it. So like right here, price starts to cut up right here. I probably would have exited the trade at that point, because it looks like price is probably gonna continue upwards from this point right here. And that's kind of what's happening right here at this point.
But you're okay with that because you just won 4 trades before that one.
Exactly. So if we caught all these trades right here, this would have been like maybe 500 pips, another 500 pips, another 500 pips. So that's like 5 wins right there. So 5 times 500, you would have made like 2,500 pips. And then right here, if you enter this, say like right here, and you exited over here, you would have lost 750 pips. So the thing is, 500 times 5, that's 2,500 minus 750. You still would have closed out the day with 1,750 pips. So this would have outweighed this little loss right here, because you would have been in profit regardless at the end of the day.
And then but then you'd be trading at like at a 2 lot or 3 lot or something.
Exactly. Yeah. So if this was the profit, you just multiply that by say a 2 lot 2.0, you would have locked in $3,500 in profit. With a scalp session right here.
So I just got to practice it until I feel confident.
Exactly. Yeah. It's all going to come with practice, because I'm sure you're familiar with everything. Like you having your background, the different things you've done in life. Everything comes with practice. The more you practice, the easier it gets. It never really gets easier. What happens is you just get better. That's really what happens.
I got you. All right.
Yeah. All right. So yeah, if you have any other questions, feel free to make another list like we did today. I think today was a great session because you had, you already knew what you wanted to touch on. So we were able to knock out all the questions you had. For the next session, if you ever have any more questions, we could pretty much do the same thing. Just like, line up your questions. We'll set up a session and we can knock out all the questions right away.
Okay. All right. Thank you.
All right. No problem, Mark. I'll send you this link shortly.